Hello, folks, and welcome to today's lecture. This will be a pre-weekly analysis on the EU chart, and I would like to start everything off from a time frame. I would like my range to stand out of, which means if I'm looking for some sort of a weekly range trade, then the bulk of my analysis are going to be on a weekly chart. If I'm looking for a monthly range trade, then the bulk of my analysis are going to be a monthly time frame breakdown. So how do I pick a market, and then how I pick a time frame to hold on, and then how do I pick a range to trade is based on the market profile of the time frame I'm interested in. And I'm using most of the time frames greater than the daily as ranges or candles or bias wise or for dual purposes, and then I'm using a fractalized time frame in order to participate on the candles bias, so on the higher time frame candles bias. If you're expecting the current weekly candle to be bullish, you would want to participate below an hourly low, below the opening price, inside a key level for a low week. If you're looking for the candle to be bullish but participating after the low is put, hypothetically, you're looking for a liquidity pool to be taken after crossing or flipping the opening price. So what are you exactly doing is you're aligning a higher time frame bias with a lower time frame liquidity pool. And then the concepts change really. So for example, the concept total soup itself, right? It's used on a higher time frame to frame order flow. It's used on a lower time frame to enter or as an entry pattern, correct? And then you're using the exact same with SMTs. You're using SMTs to frame order flow on a higher time frame. You're using SMTs in some cases to enter post CSDs, so an entry or an entry method, correct? Essentially, that's what you're doing from a higher time frame to a lower time frame, from bias to execution. Now, do you necessarily need to use the lower time frame? In some cases, you don't. It depends on your style. In some cases, you absolutely should ignore the lower time frame and execute the candle's bias anywhere below the open if bullish, above the open if bearish. And that is a way of trading, right? So that is essentially what you're looking for in a market. And then one more thing is you're gathering a lot of information, whether from watching me or watching anything else, and then you're gathering a concept and a concept and a concept, and then you're becoming an analyst. The right pattern is gathering concepts, turning them into a system, turning a system into a um, what do we call a entry pattern or a observation pattern rather, which means you know concepts. Let's say you open up a chart and you know that you enter below lows, right? And then whenever you're faced with reality, everything that will happen next is gonna be um, chop in your mind. And the reason being is you do know the concept of total soup, you do know the concept of PD raise, you do know that you want to enter at an order block, but then whenever you're faced with reality of entering an order block, you're gonna get fucked. That's essentially something that most of you, if not all of you, have. And then, but if you do the second step with it, which is the healthiest, then you're gonna apply a concept, or let's say for example order flow, and then you know how to frame order flow correctly. You study the concept, and then your system says if I want to frame order flow, I will need to observe highs and lows, PD raise, and depends on your system. So you observe PD rays, highs and lows, and then candles themselves as ranges. And then you apply the concept of highs and lows, or liquidity rather, and you apply the concept of PD rays and sponsorship, and then, and only then, and each and every single one of these has its conditions. You turn everything into a system, and then you turn a system into what you look for every week, which means you do know what you're looking for every single time you open up a chart. Not for the sake of sleeping good at night. You're saying every single weekly candle, I'm looking to buy below its open. How exactly are you buying? Right? Which levels are you interested in? Rather, how does a weekly bottom form in a weekly distribution chart, in a weekly ranging chart, in a weekly expanding chart, and so on? And that is the big difference from someone who analyzes, never executes, and someone who has a system. It's like analyzing. You see a chart continuously, and when you do in your mind, it's because of over backtesting, right? You see a chart, and in your mind, you're saying, "I would have done this and this and that." But when it comes to executing, you're never gonna find it or see it beforehand. Your goal is essentially make money and analyze and sound smart. So this is the EU chart. This is a little introduction of how to properly analyze a market. This is an EU chart, and as usual, it's very favorable. And the way you pick a market is first based on how repetitive it is and its profiles, obviously, weekly, monthly profiles, and daily with sessions. And the best one you're gonna find is EU. Not GU, not NAS, nothing else. Dixie EU. Alright? So as you can see, this is a weekly chart on EU. Let's say hypothetically I want to trade the very next candle. Now, is it to be traded? Most definitely, every candle can be traded if you respect the price delivery, which means, let's say hypothetically, you're understanding that the current candle is mostly gonna print as a range. You're gonna respect range trading. You're gonna respect extremes, and you're gonna respect how to trade a lower time frame trend inside a higher time frame range. And then you're gonna buy until a high is met, any failure swing is met, and you're gonna sell until a low or any failure swing is met. So now we're coming from a previous trend. So trending into a higher time frame key level, into a higher time frame PD rate. Now one more thing you need to know is that most of the yearly bottoms, or all of them, comes through weekly total soups, right? So a weekly raid is taking place, and this is a level I've been pointing out for a while now. A weekly total soup creates a yearly swing point, right? You're looking when hunting or looking for a bottom, you're essentially looking for two things. Okay, you're looking for the bottom itself, and you're looking for sponsorship. So sponsorship comes from some sort of a discount array found below the liquidity pool that you picked to buy below. And then the bottom itself has a specific pattern to form, or has a specific things to look at, such as lower time frame shifts, higher time frame CSDs, right? That creates the bottom or end of moves. So if you have this idea in mind, then how exactly are you trading this EU chart here, right? You're doing, uh, you're confirming a bottom after making sure it's sponsored, and then you're using more details, such as what's the next price delivery? Is it, or what's the next concept in mind? Is it breakdown? Is it false breakdown? If it's a breakdown, then what's the next bus station for retracement to stop? If it's a false breakdown, then when are we exactly going to take off and start expanding, distributing for me to start buying? These are the two main things that you're thinking of again. And this is what the issue is on EU, quote unquote. So the low is taken, the candidate of a bottom occurs, and now you're deciding to buy, correct? Now, if you buy until range high and you're expecting yearly distribution, then that's good for you. But a safer way to see it is if we're bullish, then disrespecting bearish key levels, engulfing candle ranges, and engulfing thick volumed candles that stabs into old lows is essentially a way to call a bottom, right? And then start a bullish distribution. But if you're here right now and you would want to buy, say after this candle closes, and you need to confirm the bottom and then find a safe spot. This is not a safe spot to long into. You can be wrong. And you don't need to be right, you just need to make money, right? So the idea comes as follows, is that once a low is put, you're gonna long from an external range liquidity to an internal range liquidity. Or in another term, you're gonna long a bullish retracement. And what does a retracement seek? Inefficiencies. So the previous candle, when it was the bullish EU candle, did print nicely into the gap. Got SMT'd on Dixie, and then we moved lower. Right? Now our bearish SMTs, remember what I said previously, the tool SMT on a higher time frame is to be used for a bias wise. If bearish SMTs are sponsoring bearish moves, then order flow is automatically bearish, which means you want to sell into lows. If you're ever selling in such market, that means you're selling into lows because order flow is bearish. Now, if you buy and order flow is bearish, you're gonna buy into gaps because it's a retracement, right? We cannot retrace both ways. It's gonna turn into a range. That's the right way to read price action. Now, once the top was met, the follow-up was a range, right? Which is the previous week, which is the one I skipped or observed, and most of you did. And now we have the current weekly candle and how to treat it. Now, as I said, the open gap and the bearish SMT, these are the two main tools and the two main factors for either moving higher or lower, because you want a short-term retracement to the gap or a short-term distribution back to the low, because order flow remains bullish higher time frame, and this is a dip in a bullish market to be bought. But is the bottom absolutely been put on a weekly time frame? No. Why? Because we never confirmed through shifting lower time frame and CSDing a higher time frame and changing order flow through disrespecting bearish key levels and breaking a high that took a low and so on, just like we discussed previously. So until then, you're looking for short-term concepts to be born and to trade them. Now, if you ever do, then this is how you're doing it properly. Now, let's say you would want to buy until here. It's still a valid idea, and the reason being is the gap, which is a candidate of a retracement, alongside with an up close candle in a bearish market. So the idea is taking both is an excellent idea for lower prices, but the only issue is it's SMT'd, and SMTs in bearish markets sponsor bearish moves. The second thing is, if you wait for the gap to be met, then short into the liquidity pool. That's a way safer concept. It's gonna be a safer concept if you wait for the top and a profile and then you short back to the lows, back whenever the SMT is met. Because if you remember Dixie's analysis from last week and this low, now that will be a lot more safer and that will be a lot more better, correct? Now, if you ever don't, let's say you're gonna wait for a long-term trade, then the only way to do so is through rejecting the next low that's met, or through breaking the next high that will be moved above, which will be a daily high here, or a daily range high here, and a weekly gap. And then you can safely long a bullish distribution. But short-term trades are only through waiting, waiting this gap. Correct? Now, if it's up to you really, the student, to want to long into a gap that is not sure to be met, or to wait and sit still and look for a candidate of a top like we studied before, then short safely, right? Or you wait for the breakout, you long safely, or you wait for a dip and a rejection and you long safely. So it depends on which range are you interested in. Now, which range am I interested in? Weekly. So am I longing into the gap? Possibly not. Why? I'm looking for a nice looking high probability trade, which is only inside a gap when it comes to retracements, which is only above liquidity pools. And if you ever short when liquidity pools are above you, it's very unlikely to work out. And if SMTs aren't followed with immediate breakdowns, it's very likely to fail. So a better market condition. These details shows how long you would need to wait for an opportunity to be taken. And this is why you don't see many weekly candles I execute on. It's very unlikely to see me execute twice in a row, like two weekly candles in a row, let alone monthly candles, let alone monthly ranges. So I hope this was insightful and helpful. I'm gonna continue the talking about this in the next few days, explaining everything you should be doing step by step. Until then, be safe and peace, folks.